Hello and welcome to FS Pro's News with Analysis episode. I'm Vidya.
Hi, I'm Renjit. In this episode, we are shooting this in the middle of the Iran-Israel-US conflict that's going on. And obviously, what's on your minds is the war risk cover, because you're insurance folks, you're interested in this stuff. So we know that major insurers have canceled war risk cover for ships sailing through the Strait of Hormuz and the Persian Gulf. So the premiums that were about 0.25% of a vessel's value have exploded to 1% or more. In many cases, much more than that. So your fuel prices, imports through Jebel Ali port, the daily costs are about to feel this. So this is happening right now, but we're going to save that story that hits every single person in the GCC the hardest for the very end. But in the meanwhile, we're going to cover a few interesting topics from all over the world. So stay tuned. So the first one that we're going to look at is Hippo Insurance. This is an insurtech that's based in the US, and we've been following the story for a few years now, and they have reported their first ever full year net profit. They announced 58 million net income, which is flipping from a loss, and with over 1.1 billion US dollars of gross written premium, which was up 24%, and fairly strong bullish 2026 guidance of 1.4 to 1.5 billion dollars of gross written premium. So why is this important? After years of burning cash, a top home insurtech based in the US has finally proven that the model works at scale, right? And this is probably all the insurtech founders and the regulators and investors in the UAE and Saudi must be watching very closely and saying, hey, what can we do here?
Yeah. So it gives a lot of hope to the insurtech founders. It means please hang in there. Don't give it up after a couple of years or so. Clearly, it seems to work after a point of time. But also kudos to Hippo because they have put in that underwriting rigor. They looked at constantly innovating in their proposition, whether it's smart home integration tech or home wellness tech sort of thing. So they've kept iterating until they reach obviously to this stage. Plus, US is such a complex market from a regulatory point of view. For them to have navigated that and got into a stage of profitability, it means Middle Eastern insurtechs can do so as well because we've got a similar sort of layered, complex regulatory market. And therefore, I think resilience is key when it comes to being an insurtech founder.
Yeah, absolutely. And getting to the second one, Aon, which is a global broking firm, has announced the first proof of concept for paying insurance premium with stablecoins. Now, obviously, stablecoins, as we know, are pegged to a fiat currency and is a digital way of making payments and settling, etc. So just recently, March 9th, they used USDC, which is a stablecoin, on Ethereum and PYUSD on Solana, another, right, with Coinbase and Paxos as the platform. So basically, multi-day settlements were compressed into minutes. So the advantage is obviously now you can pay people in the value chain faster. So for example, the reinsurance companies which want to get their premiums from their cedents and so on and so forth. The people do get paid eventually, but this is a cash flow issue which can be solved faster. So it's a very interesting thing. Why it matters to us is obviously GCC and predominantly UAE has been leading in terms of crypto regulations, and therefore a lot of crypto companies are here. So what else can these crypto companies do? This is an example that a major global broker has shown us. What can people in Dubai and Riyadh pick up from this is the main thing that's a takeaway from this, right?
Yes.
And yeah, sure. And the third, obviously, is we've talked about that whole war risk piece and major P&I clubs, syndicates, Guard, Skuld, North Standard, American clubs, so on and so forth. All these are these syndicates and clubs of insurers that cover shipping risk here in the region, and they withdrew war risk cover for the vessels in Persian Gulf, Iranian waters, and Strait of Hormuz. So what happens is, obviously, when there's no insurance cover, nobody is going to be in their right minds and take your ship through these areas, which means effectively the shipping just comes to a halt, right? We've heard nearly 20% of the world's oil goes through these straits. And not only that, there's a lot of cargo also going through from east to west. Otherwise, you have to go through the Horn of Africa, which is a much longer journey, right? So that's the real story here. Obviously, there will be disruptions felt not only in GCC, but also across the world in terms of fuel and supply chain. So it's a live reminder that geopolitics can reshape insurance overnight. And perhaps there is an opportunity for some of the local players and maybe the larger reinsurers to have a suitable amount of war cover. It's easier said than done. Thoughts, Vidya?
It's such an evolving space as well. I think everybody's trying to grapple in terms of what can be done. And I think there's a lot of focus on the contract wording as well now, because there's a whole lot of dispute around what is covered and what's not covered. There is a lot of ambiguity, and rightfully, but it's such an evolving space and one that we should clearly focus on and watch for in the next couple of weeks.
Yeah, absolutely. Absolutely.
Yeah. That said, I had a very interesting news piece from Standard & Poor's, the reputed global ratings agency. They have maintained GCC's insurance company's credit conditions as stable, even amidst this whole Middle Eastern war, which is a good thing because basically the insurers have very strong capital buffers. They've got, and up until before this, their earnings were pretty strong as well. They had a very good year in 2025. So generally, their sort of conditions are pretty strong. So therefore, the rating remains stable, which is a good thing. And of course, the caveat is that if there is going to be a prolonged sort of unrest, then that might have an impact on the top line. And of course, it intensifies competition and so on. But overall, I think the insurers are in a good space. They can navigate these through. And it's such a positive story to read into. Any thoughts, Renjit?
Yeah, this is a great story for the last year. But what happened this year, right? If you take a look from parallel from COVID, right? Obviously, a lot of cars may not be happily going outside because there could be strictures on some company. For example, in our place, we are asked to shelter in place. So nobody's driving as much as they used to do before, right? That does translate to lower accidents. That means the motor insurance portfolio could do well. On the flip side, there are a few accidents that are happening as a result of some of the interceptions, right? And we don't know whether the PNC coverage includes war risk. My bet is war risk is excluded, right? So the question is, the owners now who are insured will have to pick up the cost of the insurance, right? In a way, this is where probably insurance needs to step up, right? We are living in a region which is prone to these kind of events, and you cannot say, I'm not going to cover war, right? So I think there's a bit of a social responsibility angle. There's a bit of a regulatory enforcement. It could be very interesting how this shapes up the war clauses in almost all the policies. And the other piece is, I think a lot of people are reporting cyber issues on both individuals and on companies as a result of this conflict. And therefore, you could see some increased payout on those policies. Yeah, those are my three thoughts here.
Indeed. In fact, we put out a new story on FS Brew on the whole cyber insurance adoption. There is an increase of that in the UAE. So statistically, it's shown that I think 40% of them want cyber insurance, already have it. And there is an appetite for more. So appetite will go up. I have another very interesting news piece, which is coming from India. There is a new digital insurer being set up in India called Kiwi Insurance. Interesting name. So they're calling themselves as Digital First. They are backed by Westbridge, which is a PE firm. And it is being set up by ex-Tata AIG management team. So the ex-president and the CEO have got together and created this digital first insurance company called Kiwi Insurance. They just got their license from the regulator there, IRDAI. And their predominant focus is to digitally drive and provide motor, health, property, and SME and commercial risks insurance. Now, one can debate, do we need another insurer in India? Because you already have a government-owned insurance companies and also quite a lot of private-owned insurance companies. But if you look at the penetration rate and from an insurance point of view in India, it still is quite under-penetrated. Indians are still uninsured. So if the focus of the insurer goes on to the tier 2 and tier 3, then, there is some meat in the game. Then we're talking. And looks like from what I can gather of Kiwi Insurance, it seems like it wants to look at that mass SME microinsurance products and so on. So maybe there is something in it for Kiwi Insurance to pursue. Any thoughts on this, Renjit?
It seems like a good mix of experience and global money getting into it. And the question is how they will execute in terms of going into the tier 2, tier 3, which is, we have talked about it for a number of years, but I don't think a lot of penetration has been achieved in terms of percentage of GDP. But going digital is probably the only approach. However, as CEO of Policy Bazaar India kept telling us that you do need people on the ground as well. Technology helps, but it's ultimately the agent force that gets the policies to the people. So it'll be very interesting to see how they manage that in such a large country like India. But listen, we'll be watching very closely. This should be exciting.
Very exciting indeed. So it looks like the distribution is multi-layered. It goes on to feet on street and so on. But what they are projecting is they are digital first in the sense that everything can be purchased digitally if you want.
Perfect.
Great.
That was a quick roundup. That was good. Hopefully listeners like this. And like we mentioned the last time, please just don't be a listener. Subscribe, share it with your friends. That'll help us grow this podcast. Yeah. And that means you who is listening in Oman, in Abu Dhabi, Bahrain, we know you're listening. Got to help us out.
Indeed. But thank you so much for listening. I hope you enjoyed this episode we put together for you. Have a good time. Bye.
Take care. Bye, guys.